Everybody. I understand I'm live. Of course, I can't see you, but here I am from a sunny East London with Canary Wharf winking at me through the window. So the heart of the banking land. Yeah, thanks for Warren and Hayley for inviting me to this event. And let me start off right away by saying I hope I'm not being too dramatic with this title, but it has been like one of the most difficult years insurance-wise that I have known in almost a couple of decades. So let me tell you the story of that. And before we go on, a little bit about us. The Forestry is the brand, but the host company is now Globe Underwriting, which is part of Current Global. As you see, it's quite a big operation. And they've enabled us to invest in tools for risk assessment and pricing. And I'll talk about some of those later because I think it's something we should all be doing, whether you're an insurer or an investor or a forest manager. So the map just shows you where we're, where we're active. In all the dark shaded countries, that's where we have current policies and inquiries from elsewhere in the world. And then, the next, well, you don't know because I haven't talked about it, but the next third of the presentation will be a quick update to the climate trends, how we can manage this risk and how we can perhaps also generate a stable solution for the insurance interaction with clients. This is what we provide. Natural hazard cover. Fire and wind is 99% of our losses. And we do a lot of the assessment of the risk in these areas using a tool designed for us by Edinburgh University, brand named Earthblocks, and it's available generally. Now, I do mention it a few times because I'm rather pleased that this very simple tool that does some very sophisticated things. The themes, climate impact and forest loss trends, update to some of the one or two slides that some may have seen before, but also quite a bit of new stuff. And then something completely new, looking at the insurance sector and its response to events. Moving on from that, under these difficult circumstances, what sort of insurance is available? Is it traditional or is it parametric and so on? How best to make your presentation to insurers. It's a single slide, but key to-do points. And finally, is there a permanent solution to all that? So just moving on somebody tells me it's wonderful. That's a big encouragement. Right, so moving on, climate impacts. Yeah, you've all seen these charts. These are 5 World Meteorological Office models showing the steep and rather frightening rise. And as you know, under the Paris Accord, the target is to keep us below 2 and ideally 1.5, but we're already at 1.2 degrees centigrade above average. And what this means is not so much the temperature per se, but the volatility in the weather. Without intervention, it looks like we might be hitting a +3 or +5, which is a historic and worrying thought. Fortunately, there's a lot of global action, which we've just been hearing about in the first few presentations. And that gives us some hope for the future in terms of forestry as a short-term sink for carbon and biodiversity and, of course, climate. Reforestation accelerator being one of them. We heard from an earlier group about the work they're doing, the Africa Forest Carbon Coalition, and so on. So this is where we are, and actually this is why forestry was set up from 2005 to protect the investors into such initiatives. A slide, because I like the look of it, but it's Brazil, so rather scary. An updated list of major fire events, a lot of them in the USA, which has caused the sort of perceived damage in the insurance sector, so that's why they're there. The Australian fires, very interesting, an area greater than the UK actually. That 18.8 million hectares, only 8.3 million, it's a lot, was native forest, and only 130,000 hectares was commercial plantations. And it just showed up the difference between commercially, professionally managed forest plantations, native forests, and of course the wildland. So the initial reports of 15–21% forest area loss were of course true, but commercially you didn't have that same impact. But that's a size of your catastrophic event. That would match Chile in the worst year, which was 2017, which I mentioned below. A couple of regions hit 24 and 31% of their forested land, covering both native forest and commercial. So this is a serious problem for investors. What are the highlights? 2.5 million hectares lost in 2020 across the Pacific Northwest. Brazil, well, it's sort of a political issue there, as well as the natural background loss of forest. And Russia this year has been extremely hot with huge fires everywhere. The reasons, obvious, shown these before at various events. August, because it's just before the main part of the fire season on the West Coast. Steadily increasing temperatures over the century, and rainfall since 1965 declining quite precipitously. And a little map that you probably all have seen, but I've added a star to that map, Sacramento. And the reason is that everybody thinks the entire West Coast is burning. Well, this is simply not true. Parts of it burn a lot, and it's often native wildland, scrubland, forestry. It's important for insurers and for investors to know there are plenty of places, even in California, which are fire-free, more or less. So that Sacramento example is blown up here in Yolo County, and there we have a commercial and all the fire loss data for Yolo County is actually coming from the western mountainous area. So what we're seeing in the second insert is the burn scars for that mountainous land. The fruit tree company, as you see, is well clear of that. And the third land cover map just shows you those agricultural crops and so on, which is covering most of that county, with the red areas, which are urban areas. So we got all this out of earth blocks, and we use that to try and refine risk anywhere in the world. And it just emphasized the importance of careful site selection, as always. So any state, any country, any continent has its fire areas and its areas where you can invest reasonably safely. And of course, that tool helps you do that. It's not just about fires, it's about hurricanes and localized windstorms. I put this in because, again, I just like the slides. 2017, I thought 3 hurricanes in one screen dump from my phone was very dramatic, but nothing compared with September last year, with 5 hurricanes washing around the Atlantic. A sign of things to come. Hurricane Laura was severe for very many people, and as you see, $10 billion, more than that, in property damage. And Hurricane Michael before that was the precursor to Laura, and again was an extremely strong hurricane after Andrew. So to sum all this climate doom up, this is the NOAA site looking at 2020. Each of those little boxes is interesting. You can read them in your own time. The blue circles are wind, the red circles are fire, and I've awarded stars to 3 of them. So the top one, which interested me, Asia's 2020 temperature was the highest in the 111-year record. Amazing. It was 2 degrees above the mean. I mean, that is trends of things to come. We do a lot in Asia, so we're very concerned about those trends as elsewhere, but that was news to me. And then on the wind front, if you go center bottom, we've got the global tropical cyclone, 103 storms and 45 hurricanes last year. And it tied as the record year after 2018. And a specific event, Typhoon Goni, was one of the most powerful landfall typhoons on records. It went over the Philippines. Read at leisure. So the insurance sector response to these climate events and losses. Well, the first thing, and some of you may know this, have experienced it, is rates have been going up. And in this chart, I've plotted two lines. The heavy black line is the rate on line. That is, if you insure yourself with a $5 million limit, even though you might be worth $1 billion, you could be paying that percentage of that 5 million. So remember, these are averages. They're from our bordereau account, so it's very much a forestry trend. But you'll find probably this in any other insurer. This very strong rise. And what's more, you can see why it began to change. The Chilean fires 2017 was really a wake-up call. Huge losses, 100% of premiums were paid out there. And then a small break before Hurricane Michael came along, 2018, October, just before one of the alternative investment conferences, literally a few days. Then we had the Australian fires, just to alternate, back to fire, and finally Hurricane Laura in 2020. So you can just see and understand instantly the concern of insurers around the world. The red stars are the actual rate on the value of your forests. So as you see, it's more or less under 0.5%, again, dropped in 2016-17, and is just sneaking over 0.5% now in 2019 to 21. It's a strange period, but it just happens to be the period that our list of insureds covers at the moment. And because of this, insurers are generally reluctant to take on forestry. They're very, very picky, and USA is in the crosshairs of that anger. Chile, they're getting over. South Africa has always burnt, as long as I've known it, over 20 years, and Australia is a new bad boy. So we need we need to make a very strong case if we want to get insurance in these places. So who was involved? A little history lesson. 2014, not so long ago. What's that? 6-7 years. I've listed all those that I know of, and of course, I can't know everything. So on the agency side, we are ForestRe at Globe is an agency. In 2014, we were ForestRe Limited. We were international. Insurance facilitators and primacy were both Australia and New Zealand. So there were bits of international, but not worldwide. So those are the three agencies I knew of back then. And who was supporting them? Well, that jumble of insurers and reinsurers. On the left, we have insurance companies, that is to say they could insure direct into the USA or Australia, New Zealand, or whatever. And on the right, we've got those that were predominantly reinsurance. They needed an insurer to sit between them and the client. So a hodgepodge of insurers, not many, of course, this for a worldwide class of business, but that's what it was. Let's jump to 2021. And it's almost a green field. So Globe Underwriting, Forestry Globe is still there. Equinox, supported by Kiln, is there as agencies, and there may be regional ones that I don't know of, but worldwide, that is probably it. Insurers, Liberty Mutual, Kiln, Tokyo Marine Kiln, Faraday, Swiss Re, Score, and Hanover Munich Re are all still in the game, if not with very much enthusiasm. And I'll talk about the other two characters in a moment. So if we organize that lot, Globe, we're supported by Liberty Mutual Insurance in Paris, but as you know, it's a worldwide group, and Faraday. And between them, we have about $8 million per risk, per location, which is not bad in most cases. Probably enough, and perhaps 85% of what we do. But some of the bigger investors, of course, have much higher needs for protection. Feeding into Liberty Mutual are the new boys, the parametric teams. These are people that know nothing about forestry, but they're good with numbers, apparently. So they produce what we call parametric products based on largely climate data, temperature, wind speed, and so on. And we welcome them. And the reason we welcome them is because it's additional capacity. It might be Liberty Mutual, but it's not coming out of the forestry pot, if you like. It is capacity that has very little to do with forestry, but works on the numbers. And that is much more acceptable to mainline insurers. So I hope this is the start of new capacity coming into the sector, but based on a completely new way of providing service to investors. Equinox and Kiln are still there. I'm not sure who else supports Equinox, which is an agency in Price Forbes. And then the major reinsurers, the heavyweights, I think I've missed QRE, but Hanover, Swiss, SCOR and Munich are still there when we need them. And we work with all of them on a very regular basis to provide additional capacity to that we can provide. So that is more or less where we are in London, Europe, the world. I'm sure it's not complete, but that's my world as I see it. So as you see, a 60% reduction in forestry capacity, it is alarming and very, very difficult and frustrating and expensive for clients. So insurance products available. The traditional indemnity policy, you get paid for the damage done, that is still around, and it's around worldwide, and it'll be 95% of what we issue around the world. But as you see in brackets, Liberty will not do this in the USA, but they will offer fire parametric product, which I don't have time to go into in detail, but I can tell you is quite it's a mix actually. It's a pseudo parametric, so it will pay out, but on burn scar measurements on your forest of an assessment of the damage, which of course has been ground truthed in Chile and Australia. So that's new off the block, and I'd encourage people to at least give that some attention. Fire and wind, yeah, that's all the direct stuff that we've done for 20 years. And as I say, there are almost no USA indemnity wind cover available at the moment, but we're working hard on that for clients that, of course, want it as the hurricane season. Well, it's already underway, isn't it? But as the main season comes towards us. So those parametrics are listed below. As I've said, it's to attract the non-specialist capacity. So we definitely need them, and I encourage you to look at it, as I've just said. The water balance index, we'll look at the next slide, so I'll just leave that for now. And we plan to work on a wind parametric next year, based not on a traditional cat in the box, as where is a hurricane going to go and so on, but actually based on wind damage data, again, measured remotely, and where we can, we can extract fire loss data from forests over the last 20 years by reviewing the damage done after each event. And another one I keep mentioning because I think it has legs, time will tell, fire critical weather days. We will come to that. Drought, we have never been allowed to insure drought. The reason being that you never know when a drought starts, nor indeed when it ends. So it is a not insurable event because it's not, it doesn't have a start, doesn't have a finish, and you don't know, how long it'll go on for. So the water balance index is a balance between rainfall in all its forms and the transpiration or evapotranspiration from tree crops, soils, and everything else over defined periods. We have there a little chart, and it shows you in all the blue columns the excess moisture around in a certain location, and in the red bars the deficit, the moisture deficit, the drought conditions. I've just put the rings around 4 of them to say which were drought years for you. This chart, based on early data going back 20 or more years, can be done for any location around the world. Apparently it's not a huge task, but it is a central database held in Copernicus and similar types of data, so it can be done for every point on the global surface. And if that is, and if you do that for your locations, I say locations because it's going to be different for every location within a country, and obviously around and between countries, then you can do some, if you like, alignment of the very dry years with how your young trees survive. So we're thinking of this as protection for replanting of tree crops after the 25-year life, or 6-year eucalyptus rotation in Asia or something, where you want to protect those trees from the effects of drought. So the question is, if you look at those probabilities, those return periods, which of those were drought for you? How was it for you, as they say? So that is sort of the principle. And we would, this has been sold, by the way, in 1 or 2 places. So it's an up and running parametric drought product with another name. And it's superior to a single variable on precipitation, simply because it takes all the factors that drive water shortage, such as temperature, wind speed, solar radiation, and atmospheric pressure. So a sophisticated tool, and for young trees, young crops, of course, arable crops would be a no-brainer for this. It's worth looking at. My high fire risk critical days. I rather like this. I like this chart. I show it every time. So, well, no apologies if you've seen it before. But the red line is the future high fire critical days, where the temperature is over 30, the moisture is below 30, and the wind speed is above 30 meters per second. These are conditions where a major fire could develop. Again, based on hourly temperatures, going back 20 years or so, you can have a probability of high fire risk days for your location. The point of the chart there is that the current situation in this particular example, which must have been Southern Hemisphere, the number of high fire risk days in January, for example, is almost 1% of all days, but it's predicted over the next 30 years to be over three times that, 350% more frequent. February was the same for this location. So it's an issue, and if you don't want to buy indemnity cover for fire, maybe look at this, because if you are a professional fire and forest manager with the sort of technology they have in Chile, for example, or in Australia, what your concern is not fire per se, but it's these super fire promoting conditions where if you do get ignition, that fire could grow out of control and be beyond your resources. So I present it as an idea that can be done. As you see, it was developed by Area Technologies in an EU project only earlier this year, or ended earlier this year. Okay, so those are really fast review of insurance products available and the state of the insurance sector. What we have to do, and we're an agency, so we present data to insurers, having priced it on a technical basis and also priced it on a commercial basis, which really, the commercial basis is what price will they sell their capacity, their insurance limits, if you like, to you as a client. So we have a dual function, but part of attracting them, a part of getting their interest is to do these things. We've got to have loss data, and this is why we find this tool so useful, because we can go back 11 years and actually measure forest land cover burnt, and ideally compare that with your own fire loss record, hectares burnt each year, and also the value. And we can see how those two compare. And that's the sort of work that almost every company does. More and more, and certainly for parametrics, we're going to need KMZ files. These are shape files which outline each and every location, not plots within locations, but each and every location across a territory, county, or continent, indeed. And then the parametric analysis can look just at those areas, possibly at surrounding areas too for comparison, but it can just look at that and work on the price for protection there according to the limits that you want. So very important that if you don't have that technology, you get them, you map your forests as much as you can. And for the smaller family grower, they can generate them actually on Google Earth very, very easily if they know where they are on the traditional map. I have a written fire plan. 30 years ago, fire forest management plans were just about all we had to go on. So we read these things with great interest. And then as technology moved on, we sort of set them aside because we had all the Monte Carlo simulations and we could see what was going to happen anyway. Well, it's come full circle. And it's a key thing now that not only do we need all this data about losses and where your forests are, but we want to know that you are prepared to tackle a fire should it occur. And of course, fire plans will be written for the environment in which they are. And if it's Chile and Australia or South Africa, then it's going to be very detailed indeed, and it'll be a 24/7 protection plan. If it's Ireland or Iceland, then it'll be a very different thing. But will still cover the same headings which we can advise on what needs to be in there. And of course, the data. What's the whole thing worth? The plantation schedule, schedule of species, ages, and value. And finally, only insure what you cannot afford to lose. If you want to keep insurance costs down, retain as much risk as you can, your excess or deductible. That needs to be as big as you can reasonably afford, certainly at in these times, to minimize your premium. And insurance should really be there for the catastrophic loss. For us, a small grower, of course, it is. We've got a few hectares, very different. But for most of the professional investors, they are investing millions and stick to the protection you really need, and don't go for small retentions of risk. So we're coming to the end. So a little example of what we're doing using earth blocks, and the burn scar I've mentioned, but the wind damage that we hope to be able to do next year, I just compare it with what we did for New Zealand in 2014. I mean, that map took me probably several days to produce by reading reports, company losses, and so on and so forth, and arriving at what the percentage of forest lost by area in any one of those zones. So the technology is really here to try and improve this and do something that used to take days to do it in hours. And this is something that you can use and you should use. Here's a little picture of KMZs, 3 of them there, for a company in South Africa. And with this tool, as I said, you can use it as well. We can look at the overall performance within those boundaries that are highlighted in red, but also in the regions around it, the 25-kilometer boundary, which is our sort of standard buffer zone, if you like, to see how it compares and to see where fires may come from. So all investors know their country risk, their country risk, their performance risk, their process risk. They know all these, and they often list them in presentations. But when it comes to fire and wind, in the past, it's been something like low or high. Well, those days are over. You have the tools available to put precise numbers on that. And I think it's time that all forestry investors do that and take that in-house. So final slide. I think I'm 1 minute overrun. Final slide. After Chile, USA, and Australia, the insurers are suffering losses. Many have exited in the last 12 months, and others are being even more and more picky about what they'll insure, some of the bigger insurers. So, this is really serious, and we really have to, out of this necessity, we need to invent things to solve the problem. There are as yet no new entrants to insure forestry other than the parametric teams. Accessing insurance, well, we've just been through that, the KMZs and the schedule and so on. And finally, we need a new insurance structure. So for corporates and for large small grower groups with several hundred members, we're going to suggest some sort of captive for all those members, where low-level risk can be insured by the group itself, and of course they can earn from the premiums as well. It will reduce costs for them. And on a global scale, I'm wondering about the idea of a global forest owners mutual, owned by its policyholders, just like mutual companies throughout the world, the NFU in the UK, for example. And so that's a project we have in forestry, and we'll be contacting forestry investors about this later in the year once we've got the plan and the value proposition and all the wrinkles such as national licenses and so on So we think something pretty dramatic has to be done to provide a proper service for risk transfer for forestry investors. And thank you very much for your attention. Right. Well, look, you know where we are, you know who we are. We have all the facilities on the website here, the conference website, to meet and chat as and when you wish to do so. And thank you very much.